Hello, Degens. Wah, wah. All right. Well, fun times. What do we got? Let's see. Let's go over to Theta. MRL 84, MRI 84. It means something. Stress relief. Namasteo. Joe Pirate. Askus. What's going on? Alan 23994. I guess there's a lot of Alans. So fair play. Unsung. Scorpion. Sid Midianko. What's going on? Shalim. Like Shaolin. Okay. Oh, that's our page on. That's our Instagram page. Woo woo for our car rental stuff. So it's Drive LA. So if you're on the Instagrams, follow Drive LA. Don't be a jerk, even if you don't have any intention of spending $1,500 a day on an exotic. You can still look at them for free. What? All right. Joe Fernandez, ¿Qué onda? Hoop and Tony, Jim, Todd B, Bitcoin Candy. What's going on? Scorpion, Suze, Flying Knee, Adam. What's going on? Sepulveda. Yeah, it's close to Sepulveda. Well, no, not true. It's closer to it's between Kester and it's on Oxnard between Kester and Van Nuys. Probably a little bit closer to Van Nuys. All right. Brenda, Krabby, Bob, Tim, Crypto Amigos, Michael, what's going on? Morning from UT. Probably don't mean the University of Texas. You probably mean Utah. Amy, Johnny Midas. What's up? Gordon Bennett, what's going on? Northumberland. What? Wed 8008. All right. I ain't going to besmirch nobody's names. Okay, so what are we going to talk about today? Today, we're going to talk about, in a very polite way, I said, no thanks, I will not be doing the piece for CNBC. It has to do with our car shop. So let me see if I can. So basically, there's this guy that comes in and he's like the king investor. And I've looked at his portfolio. He's not the king investor. So, but this is their spiel, right? They come in, they've been filming the shop. They said, we're going to, if we offered you money to expand your business, what would you do with it? How would you do it? Da-da-da-da. And I just got the feeling from the way the early shooting was going, before I had been anywhere near those cameras, I've been getting feedback because we have our ways. And the way that they're framing it is like, we're kind of a bunch of idiots and we just need them. Thank God that Rashawn Williams is here to help us succeed. Otherwise, we would just fail. Never mind the, $16 million worth of inventory we've already created out of thin air. Never mind that. If we just had Rashawn, this is what we need to take us to the next level. And so I got the feeling that they were kind of looking at my partner and just kind of the business like we were just very lucky dummies. And so I decided to back out. So I told them I would not be participating at all, period, full stop. Thank you very much. See you later. Bye. Now, behind the scenes, obviously, me and Eric and I are still kind of working stuff, but I'm not going to participate in that production because it feels a little bit. Plus, if I get in a room with that dude, I'm going to talk him into a jelly. He's going to look like a small child, and I will feel bad. I will feel bad. So anyway, yeah. So we won't be doing that. So the CNBC thing is out. However, tonight I fly to New York to do the thing for Money Map, a new thing that they're doing. So that's kind of cool. So that'll be 2 days of that. All right. So there, you're up to speed. We're going to talk markets and we'll talk 50 basis points incoming right after these fine wait. One other thing I am doing today, I'm shooting Making Sense episode with Emil and Jeff. That'll be, I think, at 1 my time. So I don't know what time it is yours. But anyway, I don't know when that will come out. Probably maybe next week. Probably not this week. I doubt that they're going to have it already. And yes, it's right by it's by the new fire station. It's in those. We're like two kind of sections of like parking things, like of warehouses over, and we're looking to expand, obviously. So yeah, and we're actually talking to some people about even franchising the idea, but that's we're working on it. And first, we'd like to get a big fat line of credit of about another 10 million bucks, and then we will slowly expand at the, you know, there's this crisis of scale, right? Of whether you increase, like crisis of return to scale is an economic term where you increase scale of a product or a business to a certain point where you reach some saturation in the market, or there's a decreasing return to scale. So, and mostly these things are increase in the beginning, decrease in the end. You can't increase forever unless, you know, even Google found a limit, even Facebook found a limit, right? So there is not indefinite increasing returns to scale. It always, you get to this, for you economic nerds, you get into this isoquant where an isoquant, if you hear this term, which sounds a little weird, it's just a curve, and it represents the kind of differences, the trade-offs between labor and capital, right? So labor is the people and capital is all the stuff that the people use to make the business prosper, which includes putting out product, right? And so this isoquant is this smooth line usually, but not all businesses scale directly. And when they don't scale directly, you have what's called a Leontief production function, which I know you guys don't care about, and what that is it looks like a stair step where it's like, it's not just add an employee equals more products coming off the line, right? And you could imagine like the classic example of a Leontief production function is like a left shoe. Well, it needs a right shoe, or cereal needs a cereal box. They don't scale directly. They're related, but they don't, it's not a smooth transition, right? And so sometimes one employee doesn't equal a certain amount of capital. So for instance, you have labor and capital, and to find the quantity, it's the square root of labor and capital, labor plus capital. And anyway, and this is like all econ, kind of like old school econ 101. But the point is, you want to go back to like these kind of raw principles of economics when you're scaling a business to make sure that you're not like seeing the finish line and forgetting about all the little bits and pieces. And in our business, it isn't about just having more vehicles. We could have more cars, but if we don't have more space and more people to manage those cars, we can't just take on an employee and he can go and run 10 more vehicles. These guys got to be trained for a long time. Like it's like 2 months to get someone trained up, because you can't just train someone off the street and give them access to $20 million worth of cars. So you have to be careful. Anyway, so as our scale, it's the way you scale is usually the slowest point in that whole system, whether it's labor or capital. And for us, it's the training of the labor. Whatever is the slowest, that's the fastest you can scale a business. There may be other ways to do it, but typically they lead to some kind of bad outcomes. And so I would rather scale as fast as I can without, lighting money on fire and throwing stuff away. That's me. Anyway, Rashawn doesn't believe in these things. He believes you just throw money at problems and all of a sudden everything's better. So we disagree. And that's why I will not be participating. But anyway, cool. All right. So let's talk markets after these fine non-commercial breaks. At some point, we're gonna even make like a fake commercial. If any of you guys have a cool product that you've made, and you do a 30-second commercial and send it to me, I'll just play it for freebies. That'd be fun. Okay. Okay, so here's what markets are looking like. Should we play our little background music? What is it? We don't really have consensus on which one is the best yet, but we do know that 22 seems to be the optimal noise. Should we daydream? Let's daydream. Do some daydreaming. That's fun. That's good. A crypto daydream. Crypto daydream is that you wake up and Cardano's back to $3. That's the dream. Okay. So what's going on in markets? Well, not a whole super lot. Everybody's waiting for this 50 basis point hike, as you know, but they pre-trade these things. So everything's pre-traded. So the minute it starts, although the Fed stuff does seem to get, a little weird because people panic when they hint, they panic when they do, they panic when they talk about what they did, and then they panic when the minutes come out about when they talk about what they did. People react to the Fed like 4 times. They should react to the Fed never times. Because these hikes don't mean anything. They do not mean anything. Mortgage rates aren't set by the Fed funds. You guys know that, set by treasuries. So, what? I don't know why people freak out, but people, oh my God, the Fed's going to end, and the markets are going to. There's a lot of argument that quantitative easing is actually the opposite. Well, we know it's not quantitative. We know it's not easing, but it may actually be exactly the reverse. One, they strip quality collateral out of the markets, right? So there's this kind of reverse effect. There is probably some portfolio effect to the Fed, but remember, they're not printing money. But they're going to talk, they're always going to talk in terms of inflation and money because they can't, even though they can't admit that they don't do money. And the myth is that the Fed prints, and as you guys know, they do not. They make swaps on balance sheets, asset swaps, and those assets are weak assets. They're trading treasuries, which is safe, liquid, pristine, as pristine as you get, collateral. And they're sucking those out of the balance sheets and trading them for placeholder tickets. Those are reserve, bank reserves. Bank reserves are not money. And this is an important concept that people still don't get. Oh my God, Fed's gonna print. Man, they're gonna print. They're gonna print nothing. They print IOUs. And the problem is that the banks can't use the IOUs. They can't really monetize those. So what do they have to do? They have to go into repo and try to flip stuff. They have to do backdoor deals. Well, bank reserves and repo don't mean anything. They have to go and do other deals and borrow, beg, and steal to have those safe liquid assets on their balance sheets. They have to go get them from somewhere else. So there's a really strong argument that easing is the opposite. It actually creates anemic markets because they pull quality collateral out of the markets and you have a scramble for collateral. And if you have too big a scramble for collateral, you can have true freaking chaos. Scramble for collateral. Great financial crisis. There's been a bunch of scrambles, right? And then what happens is when people don't have collateral, they start to make collateral. They start to go and take bigger risks, right? And the risks are not extending credit and cash availability into the markets is what they should be doing. They do other things. They financial engineer. They start to take on weird leverage, knowing they'll get repatriated their losses from the government in and around and indirectly. And there's so much moral hazard that stems from this. We could talk for years about moral hazard, but just the reality, what you want to bake into your mind is that what the Fed says is all about its own propaganda and maintaining portfolio effect. That is all the Fed does. That is it. The people that still believe the Fed myth, portfolios get managed based on that. I know people that manage money right now that don't have a clue that the Fed does not print real money. They're like, what are you talking about? They're doing all this stuff. I go, no, it's not with real money, man. And I'm like, but you don't take my word for it. Go to their website. They say this, they're not even hiding it. It's just that they talk a different game than they print. So, but it's important that once you understand that. Now, look, markets we talked about it, they're beauty contests, right? Markets are not the reality of facts and math. Markets are the perception of all these things. It's a beauty contest. It's not the prettiest girl that wins. Not to be sexist, but let's just say it's a girl beauty contest, not one of these weird tranny ones. It's a girl beauty contest with girls, with women over the age of 18, women in a beauty contest. It's not the prettiest one that wins. It's the one that people vote on that wins. So it's still the crowd mentality, right? It's still, you can have dishonest majority. That's, so keep in mind that you can be correct, you can be right, but it still could be the wrong trades. So you always want to have your pulse on what are dummies doing. Dummies are bouncing around and managing their portfolios based on a myth that the Fed makes money, based on a misunderstanding of what inflation is. Not to belittle or detract from the pain that's caused by consumer prices going up. It hurts everyone, especially I was talking to an Uber driver and they're like, I have to pay 2.5 times as much for gas. We don't make enough money where this is like, the guy's like, I'm going to have to quit because I can't make enough money. It doesn't even make any sense. And he's driving like one of those electric fume cars, like you put bananas in it or something and it runs. And he's not making money because he has to put like a few gallons of gas to plus his electricity or whatever. It's not full electric. So, but anyway, the point of all this is that doesn't make life any better knowing that it's not technically cash inflation or currency inflation or debasement that's causing a lot of these things. But you can't discount what just happened for a year and a half where they took $4.5 trillion, floated it into society through transfer payments to Joe Sixpack and unemployment and things like this. And that money through bad decision-making and poor living came right back. 90%, $4.1 trillion came right back to big banks, insurance companies, and super rich people that get to drink from the spigot before you do. They get to drink and invest pre-inflation. You get to be punished post-inflation. How many dummies went out and bought big TVs during COVID? Please. People should have been saving. They should have been paying off debt, or they should have been, well, I don't want to say kind of like trying to front run investments, but you have to do something to break even. If everybody indexes into markets and the markets go up at the same rate and the only way to play the game is to be indexed in, that's cool, except that you don't win. You're just breaking even. You're not even getting ahead. So if everybody buys Bitcoin and Bitcoin goes up, no one wins on Bitcoin because then the prices of everything go up because everybody experienced the appreciation. So if everybody gets free money and everybody starts to spend their free money, then there's more free money, then the price of things goes up. And it's only the people that spend as quick as possible on certain investments that ever make any money. You guys see that, right? The only way to win is to separate yourself from the crowd, and you have to make very tactical investments. Florida Dan, what's up? Howard, what's up? Scott, Dubai Money, Frank. The only way to win is you have to be faster than them, or you have to be more tactical than them. You can't just index and ride it. You will lose because they will debase faster than you can appreciate because they don't happen in the same time frame. It's the same thing when a market's expanding. Wages don't perfectly track inflation. They do this. And they tend to front run, right? And then production managers over order, and that creates snafus. These things are not smooth, gradual. The whole world's not, unfortunately, blockchain based, distributed ledger based, and synchronized, where you could have an economy that expands, wages expand, credit and cash availability expands, right? The ability to build business. And then as the economy contracts, because things contract, because these are cycles, because humans are cyclic creatures, that cash and credit availability may slowly contract, that wages may top and contract, that currency supply may contract commensurate so that you don't have these, giant spikes in consumer prices. And then when you do in little areas, you could go and try to manage those little problems with some wildcat currency, manipulation, a little bit of stimmy here and there where it might make sense to juice certain areas of the market. Then the question becomes who's doing that, and are they getting envelopes under the table? Like at the end of the day, unfortunately, it's humans until it's not, until it's robots. So that's where we be. Anyway, so when you're looking at all this stuff, and when we talk about the Fed here in a second, and I read some of Jerome's statements, just understand that it's propaganda. And even though it's propaganda, you still want to understand what the propaganda is. You don't want to just be like, he's stupid, I'm not listening. You still need to listen because you need to understand what he's lying about. And Jerome Powell's not a dumb guy. This is a dude that made $55 billion in public service, which one might think is a little bit criminal. And that's a whole other discussion for another time. But yeah, Grimsel, what's going on? Shata, Belinda Cook, Spirella, CC Brown. Who else do we got? TWD, The Walking Dead kills FB, maybe? Would that be The Walking Dead kills Facebook? That would be cool. All right. So, yeah, so that's where we're at. Ella Paul, what's going on? Smoking bong water with grandma. Yeah, she's getting ripped this morning. Ripped. It's not insider trading. The Fed, remember, the Fed said it's not insider trading. They don't have insider trading. They're government official. Well, they're not government officials. Technically, the Fed is not part of the federal government. It's an outside agency. It's an outside organization. And they're not required actually to do anything. This is the weird thing. If you really look into the Fed, it is its own thing. They're not required to do, they have to answer to Congress, but they don't create law. They don't do jurisprudence. They just are hopefully a liquidity provider for the banking system in times of chaos. So just understand the Fed is not a federal organization. It's no more Fed. It's no more federal than FedEx, which is also not a federal organization. It's private business. It's no more federal than Taco Bell, although federal employees do eat a fair amount of Taco Bell, but it's not insider trading. Unfortunately implies some kind of weird intent. Is it amoral? Is it probably illegal if you really looked into it? I would say, yeah, absolutely. But who watches the watchers, right? So Chris, what's going on? JJ, what up? Brenda, Garth, smoking Taco Bell. God. Let's see. When the new policy takes effect, Reserve Bank presidents will be required to publicly disclose secure transactions within 30 days. Yeah, but that means that they've already done it. And if they've done it on insider and proprietary information, shouldn't they disclose it 30 days before they make the trade? Look, if you own 5% or more of a public company, you have to disclose, like if you're going to buy, sell, move, this, that, cash out. If you're a public, an officer, you have to do all that stuff in advance. So how is it like I can make a scammy trade that I have insider information on, and then in 30 days, I'll disclose it. Hey, this is how I stuck it to you guys. Woo woo. This is how I stuck it to you guys last month. Put another $1 million in my pocket. Yeah, that trade's dead though. Why? Well, because 6 months ago, I was setting it up. Not to mention, are we checking these dudes' phone call? You know, these dudes call each other. Hey, listen, go long. Blue elephant. Man, these dudes. So, but on the other side of it, it is what it is. We're not going to change it. I'm not one of these people who's like, go and vote, please. Right? We're not going to change it. What we can do is get more money than they have. We can be more successful than they are, and we can do it for real by like actually doing research, not having the inside track, not having some kind of link to asymmetric information and things like that. I tell you what I think. I'll give you a theory right now. I have the new theory. It's called the A-bomb theory. Do you guys want to know what the A-bomb theory is? They're pushing the A coins. Did you notice, Nara? I know you saw this. blue horseshoe lows, Anacott steel. Yes. Did you guys see yesterday Charles Hoskinson? Was it Fox? Or was it CNBC? It was one of those. It was one of the news. I thought it was CNBC. Maybe something different. But But anyway, he had like a 5-minute interview. It was good. It was clean. It was whatever. Why Charles? No one likes Charles. They're starting to push the A coins. Here's what I believe is going to happen. You're going to see it in a variety of ways. Cardano is going to be pushed, which is fair because it's quality. Algorand is going to be pushed, which is fair because it's quality with poor marketing. Cosmos is going to be pushed. So Algo, Atom, ADA. That's the A-bomb. Right? That's the A-bomb. And it's coming. Okay, so there you go. They will leave off Axie Infinity because it is actually just a depth charge, not an A-bomb. Okay, other stuff that I thought was interesting. If you were looking at S-Down, you think you missed it. It's below $1. I do not think you missed it. I think AGIX at 10 cents makes a lot of sense. I think NewNet at less than 3.5 cents. I will lean into it. I'm trying to build a pretty good position. I want to have a lot of these. Looks is going to get punished. If you're in Looks right now and you're in the profit or you're at break even, I'm not telling you what to do. I'm telling you what I did. I got the truck out. Out. Sidelines, bro. And they're like, well, when are you going to get back into it? Yeah, I'm waiting. I'm going to wait until they reprice. This is coming. They're going to reprice this. The APY and the APR are both going to get repriced in the next 6 days. And I am not going to touch it. So here's how it happened last time. A lot of people exited. And then it looked like the rewards were doing good. Why? Because so many people exited that the few people that were left were getting good rewards. But the price got gutted. In like 1 month time, it went from almost $8 to, I think it was it was less than $1. It's like 80 cents. You don't think that with them cutting these rewards by a third, because it's going to go well under 100. It's not going to be over 100 probably ever again. When it goes, you don't think it's going to get nuked? Anyway, keep that in mind. That's all I got for you as far as markets. You got to do you. You got to look at where you see value. You got to look at, you have to just ask yourself a bunch of questions. I do want people to, and you'll see it in the little floating by notes. I do want people to kind of take a hard look at what your losses were. So I have a chore for everyone, and that's going to be this. You're going to take a look at your losses over the last 12 to 18 months. I want you to write down your worst decisions, your worst losses. You don't learn from your victories. You learn from your losses. So, and real quick, let's comment just on that. I heard Algo. Yeah, Algo is the sponsor of FIFA 2022. You know FIFA is dirty, right? You guys know it's the dirtiest sports organization. You guys know that. You guys are smart. This is a smart group. FIFA is dirty. The fact that Algo is sponsoring them doesn't even make any sense to me. But I'm sure that they have stuff going on that is much more exciting than I could possibly fathom. But so far, you know, what you see, you know, they would say, well, you can't see inside our marketing sausage. Well, your marketing sausage looks like toilet paper and bong resin, bro. I think this is another sad attempt, like all the other FTX and crypto.com sad attempts to market. I think it's a waste of money. Whatever pennies they put, it is a waste. I can't imagine that this is some wide-scale onboarding event. What I can imagine that this is part of a greater narrative to expose the world to Algorand, part of the A-bomb, right? Algorand, ADA, Atom. And then, you know, Crypto Gamer says it's confusing because Crow also has announced, boy, did you see that, how that token got nuked? They cut their reward. The token got nuked. You cut the reward, Looks token will get nuked. It already did. You cut the reward, UST, Luna, will get nuked. Why? Because it's not as exciting. If you drop the yield, like if you were in the bond market, if the yield tanked, the bond would skyrocket. Well, it doesn't work that. There's not an inverse relationship. Here you drop the yield, they both drop, right? Because it's an incentive. So if you smash the yield on it's the credit card that they were using, the Crow card. They smashed the yield. So people are like, well, why do I own this stupid ass token then? And they exited to the tune of a 30% plow. Boom, crater. So it is these same companies doing the same shenanigans over and over. And that it is what it is, but just understand that when the incentives change, this is where Charlie Munger is absolutely right. You show me the incentives, I'll show you the outcomes. If you reduce the incentives, the outcomes are less positive. That's common. Come on, that's human. That's not even, you know that when you're 3. The media, I don't think the media is focused on Solana. I think certain crypto media is VC pushed, and that's why they're, but outside of the crypto media, no one's talking about Solana. Nobody. And I think that the big marketing push, because Solana is a fail, everyone that actually looks at this thing realizes Solana is a fail. We're past it. There is no discussion anymore about Solana being a realistic blockchain for the future of anybody. No, there are no real enterprises that are going to build into it. There is nothing. I mean, so Solana is really kind of it's an afterthought now. It's a bit of a joke. In crypto media, they talk about it because the 3 or 4 crypto media firms are pushed by the VCs that have huge bags of Solana, and they have a lot to gain by continuing to pump it, but they too shall pass. Don't think that because someone is rich, because someone has a lot of money, that they're smarter than you. That's not true. They may have, there's all sorts of reasons why people find success, and this is why VC firms blow up all the time. This is why hedge funds, they don't make it past 7 years, never. 3 to 4 years, probably the average. So, and traction with NFTs for Solana, who cares, right? Is Solana going to be the blockchain that could handle all of the flights for American Airlines? No. See, because they can't scale. Because of the, security, scaling, and transactional throughput and liveness of those 4 things, they just focused on a fake transaction throughput. And they focused on that fake number. And so they don't have liveness and they don't have security and scalability. You can't have scalability if the others are, because as you scale, you break. They scaled, they broke. So that's it. So Solana, if a few people trade NFTs, great, good. Same thing with Ethereum, really. Ethereum is pretty much just NFT now. And now, will Ethereum be able to scale? It doesn't look like it. Now, will they eventually scale? Sure, because other people will do the work and they'll look at the software. You don't think they're learning from Ouroboros? Look, Polkadot liked what Cardano was doing so much, they took the consensus mechanism and just went copy paste. Cool. What is it? It's not copying, but the whatever word means copying is the best form of flattery, right? That. So I don't know, man. You make these devs rich, they just don't want to get up and work. So, but yeah, I think the A's are coming. So we'll see. The IOC is arguably dirty. All these sports organizations are they're just scummy. Well, you know what it is. People get in positions of kind of a little bit of a modicum of power, and they realize they can monetize it, and they monetize it because humans are greed-based and we want Ferraris. So that is what it is. All right. So, okay. The only thing I want you to get out of this is just please look at your losses over the last 12 to 18 months. This is when you do some kind of balance sheet psychology for yourself. Don't do the opposite, right? Of what of the portfolio effect that Jerome Powell and his ilk would love you to do. They'd love you to react. They think that anything they do has any effect on inflation. They are so they are so off base. And what will happen is if inflation, whatever that actually is, the way they measure it, if CPI, that's probably a fair term. If CPI comes down, it will not be because of anything the Fed did. We're going to unwind our balance sheet. To who? You're going to give banks back their assets that they should have had? And then those banks can actually make money off those assets, and maybe they might feel a little bit more comfortable lending. But wait a minute, isn't that the opposite of QE? I thought you had to steal those quality assets to expand the economy. Wrong, Jerome, because you guys don't understand money. So if they give quality collateral back to the market, maybe the markets ameliorate this disaster itself. And maybe they start extending credit and there's more cash availability and the market starts to, some of these weird snafus and the supply chains start to fix themselves. So these are all the things we have to look forward to when the Fed gets out of the way. What the Fed should do is unwind their entire balance sheet and go F off. Just go away. Having Janet Yellen at the Treasury, I bet the Fed thought, oh, this is our 1-2 punch. We now run both. No, you don't, because she's a dummy too. She's the one we're in recession. You guys get that, right? It's 2 back-to-back quarters, GDP stagnation or flatline or down. Well, we're there. We've already hit it. That's it. We're in recession. People can say what they want. The real number says it's in a recession. Great. Woo, 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 woo. So Janet Yellen was the one who said before she left the Fed, we will never have another recession because we have such amazing control over these markets. Shut up, dummy. I think that was the press conference where the guy held up the sign that said buy Bitcoin. Do you remember that? Right behind Janet Yellen while she was testifying. It was so good. Okay. So there we go. So there's your market thing. Let's talk Jerome Powell. Oh, Jerome. Mr. Powell. I love his picture. His ears are so big. He can hear what we're thinking right now. Powell says taming inflation absolutely essential in a 50-point hike possible for May. I'm just going to leave his stupid picture up there while we talk about this. Jerome Powell said on Thursday, the central bank this is last Thursday, is committed to raising rates expeditiously to bring down inflation. Okay, true or false? False that it will work. True that they will be committed to raising rates. Of course, because it doesn't affect the real world. And this is why you look at the yield curve, it's basically flat. The back end of the curve is saying, no, we think you're full of it. They're calling him a bold, they're either, the bond market is either calling Fed an idiot or a liar. Neither of those two are good. Neither. Okay, second point, this could mean an interest rate hike of 50 basis points in May as prices rise at their fastest pace in more than 40 years. Probably, but listen, from where we're standing, good, get them out of the way, raise all you want. All you're going to do is bankrupt a handful of companies that basically have to sit on your words and pretend that they mean something. But anybody that's beholden to the Fed for repaying debt, they're not super happy because their debt service just went up. Guess who also has to service debt? Oh yeah, the government has to service debt. Again, the Fed is really only talking about people that deal with the Fed, people that park money at the Fed, right? That's a handful of banks. So the Fed is not talking to the world. The Fed is not talking to the US economy. The Fed is talking to 24 broker dealers. That is also another thing people don't realize. The Fed doesn't affect the real world. And they don't even affect the banking market. But the real world, there's nothing the Fed does that touches the real world ever. Nothing. They just deal with prime brokers. That's it. Broker dealers. There's 24 banks. That's it. It's that he might as well be in a room with Jamie Dimon and a bunch of other dickheads talking about this stuff. We don't even need to hear it because it makes no difference to us. None. Oh, but I hope they do the 50. All right. It's absolutely essential to restore price stability. Dummy, nothing you did created instability. And this is what's funny. Part of me thinks he believes this, but the other part of me that knows that he stole like $55 million, Makes me think that he's just kind of going through he can't be this stupid. No one can be this stupid, not for real. You can't really be this stupid, can you? Can someone be this dumb? Not really. Not and put a tie like that. That guy's tie is dope. Look at that knot. Fancy ass knot. Federal Reserve Chairman Jerome Powell affirmed the central bank's determination to bring down inflation, which they have no control over, and said Thursday that aggressive rate hikes are possible as soon as next month, which is now. It's appropriate in my view, Jerome Powell, it's appropriate in my view to be moving a little bit more quickly to raise interest rates. No, not true, actually. That's a lie. I'll tell you why it's a lie, because he was not one of the ones that voted for a 50-point hike. There was other members of the committee that did want a 50-point hike. He was one of the 0.25 basis point hikers. So the very first thing he said is a lie. But it doesn't stop there. Powell said while parts of the IMF panel moderated by CNBC's Sarah Eisen, I also think there's something to be said for front-end loading any accommodation one thinks is appropriate. That's a lie, because if that was the case, you would have done 50 on the first hike, not 25. Lie number 2, he's only had 2 sentences, and they've both been lies. Hey, listen, we're batting 1,000. He finishes, I would say 50 basis points will be on the table for the May meeting. 2 lies and a truth. What is that? That's in dating profiles, right? 2 lies and a truth. Or 2 truths and a lie. 2 girls, 1 cup. Man, it's so confusing. So yeah, they're going to do a 50. Come on, wake up. Powell's statements essentially meet market expectations that the Fed will depart from its usual 25 basis point hike and move more quickly to tame inflation that's running at its fastest pace in 40 years. Yeah, compared with, remember, it's not the highest it's been, it's the pace. Read the sentence. Its fastest pace. Well, yeah, because what happened the last 2 years during COVID? People kind of forget like the big event. Other than the obvious, Mrs. Lincoln, how was the play? Come on, man. But it's all in the nuance, isn't it? A basis point equals 0.01 percentage point. Thanks. However, as Powell spoke, market pricing for rate increases got somewhat more aggressive. Expectations for a 50-point move in May rose 97.6%. Expectations, nothing else. This is the Fed. The Fed is theater, it's expectation policy, it's performance art, it's whimsy, it's Don Quixote, it's tilting at windmills. Do you guys know this, by the way, that never actually appeared. It's attributed to Don Quixote. It was not in Don Quixote. And the tilting, for people like, I don't understand tilting at windmills. The idea was that like a windmill at a distance looked like this giant monster. Right? This giant that you would have to fight with these big arms, right? You're like, and then you say, well, tilting, what's tilting referred to jousting. So fighting a giant fake enemy, an imaginary enemy. And that's where the term comes from. And it's attributed to Don Quixote, but it was never actually said in Don Quixote. Boom, your brains just got at least 1% larger. Traders also placed an additional hike equivalent through the year's end that would take the Fed funds rate, which sets overnight borrowing level for banks, but is also tied to consumer debt instruments. Some, and when they say tied, it's loosely tied because treasuries determine borrowing rates, not Fed. Fed is Fed funds for banks to do business with the Fed overnight, and that's it. All right. Whew. Stocks also fell, sending the Dow Industrials down more than 400 points, and the NASDAQ with its relatively sensitive tech stocks lower. Okay, no one cares about that. At its March meeting, the Fed approved a 25 basis point move, but officials in recent days have said they need to move more quickly, with consumer inflation running at an annual pace of 8.5%. Well, kind of. Based on what? Based on, do you back out gas? Do you think gasoline and oil prices are a reciprocal of the Fed? Do you think the Fed has anything to do with oil? No. So you back out 1 or 2 things, and then what you see is an overall increase in consumer prices that has a little bit to do with Treasury and stimulus payments and transfer, and a lot to do with companies basically chaos profiteering. right? Taking advantage, basically sticking their foot on American necks. You tell me, and I know I've beat this drum before, but you tell me, how is it that if these companies are just passing the price hikes on to us, how they're all turning record profits? You can't have those two things be true. If you're passing the price difference on to us, how is it that you're making record profits? We're not buying more stuff. We're buying the same amount of stuff. It just costs more. So if you're passing the price differences on to us, how the fuck are you guys making world-changing banner money? The best years they've had for a lot of these companies, like the 30 or 40 of the biggest American companies had their best years in history. Fuck you guys. Like, come on, man. These dudes are so sketch. And it's all part of that corrupt moral douchiness that is fucking sewn into these markets because of these dudes. And not only these dudes, but because of a compliant media and a bunch of people that don't ask questions and they just eat it. Yeah, because Jerome. Our goal is to use our tools to get demand and supply back in sync so that inflation moves down and does so without a slowdown that amounts to recession. Well, we're already in recession. Powell said, I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our best to accomplish that. You have nothing to add to this conversation, Jerome. There's nothing you can do. There's nothing you've ever done, ever. Jerome. It's absolutely essential to restore price stability. Economics didn't work without price stability. Yes, it does. Economics doesn't stop. People don't stop buying stuff. People don't stop making it or selling it. Stupid. I can't read any more of this guy's stuff. It'll drive me crazy. The Fed resisted raising rates through 2021, even though inflation was running well above the bank's 2% long-term. By the way, do you guys know why that 2% target? Do you guys know why there's a 2% target? Because the first central bank, and I think it was Australia, back years ago, set their rate for inflation targeting. It's the 234, right? 2% inflation, because why not, right? 3% GDP growth, 4% unemployment. 234, why? Because that's the only three goddamn numbers these idiots can remember, because they're so stupid. They're so stupid, but they're not stupid. That's the thing. That's what's so frustrating. They are not stupid. And that means, there's only two categories really. Criminals or idiots. When people are trying to do this mass perversion, you're either a criminal or an idiot. So, I don't know, man. I guess I'm not sure where these guys are. Under the policy framework adopted in late 2020, the Fed said it will be content with letting inflation run hotter than normal. We're going to let it. Oh, really? They're going to let the sun rise, everyone. They're going to allow the sun to rise. Otherwise, if the Fed said the sun can't rise, it just wouldn't. They're going to allow it. Woo. Huh. They're going to let it run. They're going to let it run hotter than normal in the interest of achieving full employment. By the way, is it the full employment where you don't count the people that just give up and leave the labor market because they can't find appropriate work? Is that the full employment you're after? Because if you quote one of the U numbers, you go, man, we're at full employment. Right, except for the millions and millions of people that have to take crappy jobs. You count, or the millions of people that they've already done their 40 weeks on unemployment, so they no longer get benefits, so they fall off of the roll. So since they're not collecting unemployment, they're no longer unemployed. Wait, is it possible that people have just exhausted their benefits and they're getting booted from unemployment, but they still don't have a job? Is that even possible? No, it's not. It's not at all possible. Please, bro. These dudes, they're just disingenuous with everything they say. Every statement is dubious and fucking dirty. Until 7 months ago, Powell and Fed officials had insisted that inflation was transitory. See, that's the thing. They were kind of right. It is transitory. Everything's transitory. In the same way that in the 70s and 80s, there's nothing that Volcker did to tame inflation. He didn't raise rates because he was a hero. They didn't have any clue what they were doing. This too shall pass. You know what the cure for high prices is? It is high prices. People stop buying houses when they're $1 million too expensive. They finally go, nah, man, you can keep your piece of crap. I'll rent. Anyway, they believed it was transitory, which I agree, and would dissipate as COVID pandemic-related factors such as clogged supply chains and outsized demand for goods and services had abated, which I think is true. However, Powell said those explanations disappointed, and the Fed has to change course. So when your performance theater is not well received, you just change. This isn't a movie, bro. It's not another bad Michael Bay film, and you just go film another one with a different ending. It's not like Quentin Tarantino's last film where he just rewrote the way it ended. The Patty Hearst story and Ted Bundy, not Ted Bundy, but like you can't just rewrite history. I mean, I guess you can. History is written by the winners, right? People were disappointed with those expectations. Okay, well, all right. If they don't like what you have to say, by all means, you should cave in. It may be that actual inflation peak was in March, but we don't know that. So we're not going to count on it, he said. We're really going to be raising rates and getting expeditiously to levels that are more natural and that are actually tight. It turns out to be appropriate. If it turns out to be appropriate once we get there. These will be Powell's last remarks. They're going their quiet period before the May 3rd and 4th meeting of the Federal Open Market Committee, which sets interest rates. We'll hear something today. He is the latest Fed official to say rapid action is needed to take down inflation. Do you guys think inflation is going to come down because of what these idiots do that only really affects a few dozen banks? Or do you think that maybe supply chains and high prices, as supply chains get fixed, buyers back away from the market, and banks realize they're going to have to start opening up credit, lines of credit, and extending credit and cash availability to expand this economy in a real direction, is probably more what's going to fix this crazy inflation, bro. Anyway, it is what it is. In the same way that we looked at that and kind of laughed at all this, you still have to listen to what these people are saying, because, you need to know the narrative even if you don't agree with it. You need to know what the people that you don't agree with believe, because maybe there's something you overlooked. You should always be looking and say, man, did I overlook it? Did I overlook this? I mean, are these guys right? Are we wrong? Are we the weirdos? Well, maybe. You're measured by your successes, right? At the end of the day, you have your balance sheet. This is why I urge you over the next few days, until we get together again, I want you to look at your losses. I want you, and everybody says, don't focus on the negative. Focus on the negative, right? Focus on the negative over the next few days. I want you to dig in. I want you to eat it. I want you to just absorb it and digest it. Your worst losses. I want to see the worst decisions you made. And I want you to obsess about those really bad decisions. And then I want you to think about what your thinking was like at that time. Okay, why did I make this decision? What was it? Was I consuming something specific? Was I listening to people too much? Was I not asking why? Was I not doing my 5T? Like, what was I doing or not doing that had me, making these decisions? Did I exit too early? Did I exit too, whatever it is, I want you to get your 3 worst failures this year over the last 12 to 18 months. And I want you to eat those. And I want you to learn something from it. True, they aren't losses if you haven't sold. So Howard, if you have, I'm underwater on Algorand, but I believe that Algorand, the greater story is it will do fine. They just need to fire Barry and their marketing fail. But again, we don't know what they're doing internally. We don't know what Cardano's. We tend to look at a project's price and say that's failure, and that is not accurate. A token's price is not an explanation or explication of all of the other things that they've done, right? It's not all their code submits. It's not all the things that they're bringing through blockchain-based voting and governance and turnkey systems and economic identity and digital onboarding and all this. That's not the token price. It's just that we see the token price. Yeah, I can tell you, I mean, I'm way underwater on Flow. Flow is one of my worst. Flow and Algorand. I mean, just dumpster fire, terrible, garbage. I'm getting crushed on those. I'm not going to sell them. It is what it is. But still, if you don't have any bookable losses, then go and look at some of the things that you bought that maybe don't make so much sense. Or maybe they do, I don't know, but I want you to find your worst losses. I want you to obsess about them. I want you to get nitty gritty and negative so that we can take that behavior and then we can start rewiring and see, is it a foundational problem? Is it a misunderstanding of markets? Is it something, right? Something. Let's figure out what we effed up and let's try to fix it. But we can't fix something if we don't have we have to be able to backwards engineer the mistakes and then try to get something out of it. We all have losses, bro. But I think if you're doing the right game theory, you're going to be doing like 10, 15% losers and about 80 to 85% winners. So keep that in mind. And real quick, one last shameless plug. Go, if you have an Instagram account, Drive LA, like Drive LA _. Go and follow us and look at our cool pictures of like super unattainable humans that we use for marketing, because why not, right? And sometimes we do some funny stuff, but mostly it's just this super unobtainable humans crawling around. I don't know why you would crawl out of a car like that. It seems like you would want to be crawling into the car, and it seems like her hands would be dirty. But I don't know. Maybe they're so clean because that's probably a $74 million house. All right. We will see you on the next one. Stay in school. Don't do drugs. Don't do anything about poor, insolvent, drunk, strung out on meth. Grandmother wouldn't do. And as you know, that's very, very little. She does. I think who is it? Is it Crypto Gamer? Who's smoking meth with grandma right now? Or bong resin. Anyway, have a good one. We'll see you soon. Be fun with making sense. I'll try to do some little clippy clips from New York, and we'll see you in the next one. Boop, boop, boop.